Most Australians don't realize this. You don't need to move to Dubai to reduce your tax. You can legally pay significantly less tax and in some cases potentially even zero tax here in Australia. And this is not a loophole. This is how the system works. The problem is that most people were never shown how to use the system. They earn income, they pay tax, and they assume that's just how it works. But after more than 20 years working in SMSFs, I can tell you this. The people who build serious long-term wealth in Australia are not doing anything aggressive or risky. They just understand how to structure things properly. And one of the most powerful tools they use is superannuation, and more specifically, self-managed superannuation funds. Now, the biggest issue I see every single day is not income. It is a structure. Most Australians are operating everything in their personal name, which means they are automatically exposed to the highest tax rates, and they try to fix it with deductions. But deductions are not a strategy. They help, but they don't fundamentally change your position. In practice, what I've seen is people doing the right things just in the wrong structure. And that's what cost them. Because once the financial year ends, there is only so much you can do. This is where SMSFs become very powerful because they give you access to a completely different tax environment. Inside super, your income is generally taxed at 15%. Capital gains, if the asset is held for more than 12 months, effectively taxed at 10%. And once you move into pension phase, that can go down to 0%. So when I say you can potentially pay zero tax in Australia, this is exactly what I'm referring to. Not by doing anything unusual, but by holding assets in the right structure over time. And we see this every day with clients. People who understand this plan for it, and build towards it over years, not overnight. Now, let's make this practical. A lot of people come to us wanting to invest in property. Yes, property can be held inside an SMSF, but it has to be done properly. You need the right structure. You need a compliant loan if you're borrowing, and you need a proper investment strategy. And everything must be at arm's length. When it's done correctly, what you are doing is holding a long-term asset in a 15% tax environment. And over time, the difference is significant compared to holding it in your personal name on a higher tax rate. Now, that doesn't mean it's suitable for everyone. But when it fits, it works very well. Another area we are seeing a lot of interest in crypto. And this is where I need to be very clear. Crypto inside an SMSF is not just buying assets. From an audit perspective, this is one of the most complex areas right now. You need to be able to prove the ownership. You need to be able to prove separation from your personal assets, accurate valuation at 30th of June, and full transaction history. If you can't demonstrate that, auditors will qualify the audit report. We see this happen. So again, the opportunity is there, but it has to be done properly. The next piece, which people often underestimate, is timing. When you do something, it can completely change your tax outcome. We see this all the time with selling assets, making contributions, or starting pensions. For example, moving into pension phase at the right time can shift your tax rate from 15% to 0%. That's a massive difference. But it doesn't happen automatically. It needs to be planned. There is also a lot of misinformation out there about self-managed superannuation funds. Relying on your tax accountant at tax time doesn't work. By then, We are dealing with history. Chasing deductions without a strategy doesn't work. And copying what someone else is doing is risky because their situation is different. What we are seeing more and more now, especially with SMSFs, is increased ATO and auditor scrutiny, particularly around newer asset classes like cryptocurrency. So everything needs to be structured, documented, and compliant. If I simplify all of these, the best SMSF tax strategy is actually very straightforward. It comes down to using the right structure, understanding how the super system works, and planning over time. No shortcuts, no tricks. The people who build wealth in Australia don't avoid tax. They manage it properly, and they choose the right structure. And they do it within their rules. So if you take one thing from this, you don't need to go overseas to improve your tax position. You just need to understand how the system works here and use it properly.